Yo, yo, yo. What's up, guys? How are y'all doing? Wait, let me see if I can put the chat here. Put that there. Do you guys hear me well? What's up, Jake? How are you doing? Alright, guys. So, today we're gonna do a backtesting session plus a recap of the week. So, talking about inversions and setups you could have taken this week. And yeah, because a lot of people wanted to see that backtesting session, and now I'm gonna give that to y'all, that's for sure. All right. So I'm gonna wait a little bit. Tell me, do you guys want to hear music in the background or no? If not, we're just gonna start it. If yes, then what's up, guys? What's up? What's up? Is my mic good, or should I bring it a little bit closer? No music is better? Alright, say less. Hello, hello. No music? Alright. Alright, guys. So we're gonna start. What is it? 05. Yeah, we're gonna start with the weekly recap. So, always, guys, I'm gonna go through two setups. Alright, there's two models really that I show on my YouTube. Alright, two models. Let me see, like, okay. I have my face on the bottom left, so I have to see if my if I'm not typing on my face. So two models, all right, you can use. Okay, first model being M15 for value gap plus M1 to M5. So M1, M2, M3, or M5 IFVG. All right, that's called a reversal play. I'm sorry if my if my keyboard is too loud right now. But yeah, so first model being M15 for value gap tap. You're using the 15-minute for value gap as your tool to find a bias on the lower time frame and who's actually in control of the market, and so you can just play with the trend. All right, and that's the first. And then we have the second, which is the gap fill. So gap fill IFVG, you go on the bottom right of your trading view chart, you select RTH, and then if there's a gap, you want to target that gap and you want to find an IFVG in the opposite direction of the gap, so you can know basically that some participants are getting squeezed and it's the moment that you should go and fill the gap. So these are the two models. Like the entry models, you guys already know it, but an inverse looks like this. So you have a 3 candle pattern, 1, 2, 3. The wick of the first candle doesn't touch. You see this? So I put it in blue. So the wick of the first candle, right? The down wick of the first candle doesn't tap the up wick of the third candle, which creates a gap. And that gap tells you a story, tells you that okay, there was aggression right here. So you know there's most likely participants that are sitting inside this gap. When you see this and you tap your zone, which is your first model, you tap your zone where you know buyers are going to be sitting here passively, and then you disrespect that gap, that is a order flow scalp back to the upside. All right, these are like two types of order flow scalps. And then the gap fill, that would be the first. And then the second, it would be, you have a close at 4:15. All right, this is the close at 4:15 p.m. EST. And then at 9:30, if you open and you go to the upside first, and you let that gap, an RTH gap, you want to target it by looking at an inversion fair value gap at the top of the range. So sweep of liquidity, then you find a bullish fair value gap, disrespect it, then you target the gap. That's pretty simple, but if you're looking for a model that has a high win rate, low RR, that's pretty much it. All right, so what we're gonna do today is we're gonna take a look at, in my opinion, the 5 best trades of the week. All right, I already made a thread on my Twitter, so if you wanna, pull out the thread on Twitter and see exactly, and just follow with the annotations I wrote down there, it would be good if you're not familiar with the system. But right now, we're looking to see this model play out this week. Let's say right now I start on Monday, 9:30. All right, so boom, we're gonna start. This is not the backtesting, this is just the weekly recap for now, and then we're gonna do the backtesting session. Don't worry, I got you guys. If you guys have any questions, make sure you type them in the chat. Could be anything, literally. Good to know you fix your PC. Yeah, I fixed my PC like literally the same day. So yeah. So let's start right here. So when we go into the open, the first thing I know, right, I'm gonna get this out. First thing I know is that the 9:30 move is an influx of liquidity. All right, we call that the Judas swing. So we should see a rate on liquidity, all right, to fill bigger orders. And then if you see rejection from there, this 9:30 move should just be a fake out. All right, it should have been a fake out move to generate, sellers in the market, sweep liquidity, then go in the opposite direction. So what do I know? At 9:30, I mark out my levels. So I mark out the buy side, mark out this buy side level. All right, I have a 15-minute fair value gap just above, right there. All right, and then let me put that a little bit more. All right, 35. All right, I have a 15-minute gap up there, and then we have a 15-minute fair value gap below this low here. All right. If you take a look at this right here, you see that we filled like more than 50% of that gap. For me to recycle this gap and reuse it again, all right, we cannot pull down here, retap the gap, and then I'll look for an inverse right here. I can't do that. Why? Because these are equal lows. If we go close to a low, I expect that this low will get swept. All right, I don't long equal lows. I don't long, from wicks or rejection blocks. I wait for the low to get swept. Then you would take a look at the reaction from the gap. So for me to recycle this gap, I only mark out this portion right here because I'm not interested in longing if we just pull back to that line, which is, I think, in my opinion, a lot of people are doing that mistake in backtesting. They're like, yo, I backtested your model, I have a low win rate. Are you sure you understand everything about the model? Like, you gotta understand the liquidity aspect first, all right? Make sure you know that. Then, all right, by the way, guys, if we have 100 likes on everything I love, I'll give out an account, a Tradeify account, all right? 100 likes, so, share that life to your sister, your mom, and bring bring a lot of people here, all right? So, we have a 15-minute gap. For me to recycle this gap, I need us to sweep the lowest point where we filled that fair value gap. So I have those two levels marked out: liquidity, fair value gaps. In this gap, so right here, it's 9:29. The market is going to open right here, opens up, goes lower. What do I know about the 9:30 move? It's an influx of liquidity. We should see a fake out, right? We usually don't see, 9:30 being a breakout and then we never come back. Of course it can happen in some market conditions, but let's say here we swept liquidity. I want to see what's the reaction from sweeping this low and tapping into that 15-minute gap. So as soon as we sweep this low, tap into that 15-minute gap, I want to look for something called an inversion for value gap. But right here, I don't only look for an inversion for value gap. I want the leg that created the sweep to be a swing high to swing low, and I want the leg that created the sweep to be a singular for value gap. So I need to find a time frame, whether it's on the 1, 2, 3, or 5-minute chart, that we have a leg, so a swing high to a swing low that created the sweep, all right, with only one for value gap on the time frame I'm looking at. So right here I swept liquidity. So is the 1-minute chart a good time frame to look for inversions and to be able to locate where buyers and sellers are in the market? Right now, no. Why? Because we have a gap here, we have a gap here, and we have a gap up there. So we have 3 gaps inside the swing high, from the swing high to the swing low. So for me, gaps only mean buyers and sellers. So right here, a bearish for value gap means sellers. So there's sellers here, sellers here, sellers here. All right. So I'm not looking to get into those those longs right here because there's too many areas where we could possibly reject. I need to find one time frame where I'm going to be like, okay, sellers are located right here. If we squeeze them, we're going to go to the upside. So right now what I'm going to do is I'm going to scale up a time frame. I'm on the 1-minute chart. I'm going to scale up to the 2. On the 2, what do we see? A big singular gap. Boom. All right, that's good. So from swing high to swing low, we have one gap. So on this gap, I can trust the fact that the sellers are located right here. And if we do close above this gap, the sellers are being squeezed. That's what I know. Okay. What goes into my head is if I know that sellers are inside this box, if we are truly bearish, we should pull back to this gap, hold it to create new lows. But if we're bullish, we're going to squeeze every single seller inside this for value gap, and then we're going to see a move higher. That's my bias. That's my thesis every time I go into the market. So boom. Now I'm on the 2-minute chart. We created that swing from swing high to swing low. It was a singular gap, all right? So for this candle to be a singular gap on the, you see right here, it's 1, 2, 3, all right? For us to use the 2-minute time frame, I need the third candle to close here. Why? Because if it doesn't close, inside the downwick of the second candle, it means that we're gonna have 2 gaps, which is exactly the case here. We didn't close, up here, so we have 2 gaps on the 2-minute chart. So then my thesis is still wrong. I cannot long from this time frame, right? I have to use another time frame that is above the 2-minute. Why? Because I have 2 gaps here, one here, one here. So there's multiple sellers sitting inside this range on the time frame I'm looking at. So now I'm going to scale up a time frame again. So boom, I'm on the 3. So now I have a nice rejection and a big gap. The bigger the gap, the more I can trust the fact that there's a lot of sellers in it. So then boom, right here, I call this, this is a signature in price where this is like, I think this is one of the best signatures in price, in my opinion, in the last few years that we saw with the volatility on NQ. But this is like a 4-candle pattern. So you see where we create a fair value gap with that 3-candle pattern right here. So we have 1, 2, 3 candles. If the 4th candle displaces up and breaks through this fair value gap, this is, so powerful in terms of order flow. If the 4th candle is the one disrespecting the gap, it's insane. We see a lot of fair value gaps where, we have that 3-candle pattern and then the 4th candle chops 5th, and then we go inside this gap, reject a little bit, and then we break through. This is still a good inversion, but if you have an inversion on the 4th candle on the time frame that you're looking at, it means that there's a lot of, it means that the sweep right here generated a lot of short squeeze here, and there's a lot of buyers that are interested in price right now. So it is a really good order flow confirmation right here that you see 4th candle disrespecting that big gap. So at this exact moment, you swept sell side, so you're bullish. You tapped a bullish 15-minute fair value gap, so you're bullish. You created a bearish fair value gap, so if you were truly bearish, you should have respected that gap to create a new low. But no, you disrespected that bearish fair value gap, creating a bullish inversion. So now there's 3 confirmations that is telling you that price is going to go higher. Plus you're adding the 4th confirmation, which is the 930 move should just be a fake out to go and take out a liquidity pool to then drive back to where it actually wants to go. So this is 4 confirmations. You have so many confluences that price is going to go higher. Plus, if you want to add more confirmations, you have stacked highs above you. You have, highs that have a big wick are highs where, holds a lot of liquidity inside of it, right? It means that there's a lot of rejection here. So participants right here got squeezed. So you have all those buy side levels being generated above you. All right. So this is a really, really good setup. Then boom, this is where you would go long. And right here, if you ask me, do I put my stop loss below this low? I mean, always your stop loss should be kind of a mental stop loss, being that if you see a candle closure through the inversion fair value gap, you should close right here. You shouldn't close, let's say, with a hard stop at the low. You should see the reaction from the inverse. You're basically telling yourself that you're going to see a cover, all right, a cover from that gap. So if you don't see the cover in it and the sellers are starting to step in and then boom, you see a big bearish candle, you're most likely going to lose the trade, So what you're going to do is that you're going to put your stop loss right here at the beginning, and you're going to take a look at, okay, do we see a candle closure through this inverse? If yes, I'm just going to get out. But this is a mental stop loss, all right? And of course, if a big candle, starts going down and goes below this low, you're out. You're possibly already out. So this is the trade that you're looking at. Of course, if you are a higher RR trader, you could, decide to let it ride. But we're talking about 1-to-1s here, so we're just gonna execute it right here. This was the first trade of the week on Monday at 9:30. So right here, you pull back to the gap, you see the cover, and then right here is where you would get out. All right. Of course, you could hold towards more and higher liquidity pools, especially you see this unfilled 15-minute gap. This is a really good area also to take out profit. All right. Okay, good question. But on the M2, there's 2 fair value gaps from swing high to swing low. All right. If there is 2 fair value gaps on the M2, but on the M3 there's only 1, you would favor the M3 since it's a higher time frame, so you trust the highest time frame inside those swing points, if that makes sense. So how would you find your right dollar amount of risk? You go on TradingView, you right click, all right, on your mouse, and then you just drag down your stop loss, and it tells you exactly what risk you're on, or you could just have it inside your head. So for me, what I do is I know that 20 handles on one NQ contract, one mini, is $400 of risk. So if my stop loss is bigger than 20, I immediately go micros. Period. All right. So this was the first trade. If you want to take, a picture of it, put it in your journal. That's really important. So we have 4 confluences right here. We have first one being the Judah swing. All right, 930. 930 fake out. Then we have the M15 gap. So M15 fair value gaps are telling me who's in control of the market when price taps this zone. If it taps the bullish 15-minute zone, I know that the last time that price was trading from 2176.5 all the way to 21,793.25, buyers were interested in price and aggressively to the upside. If I know this information and I have lows stacked inside of that zone, I want to take a look at the reaction when we enter this gap, right? It's that simple. So then boom, and then you have the M3 IFVG, all right, and that's pretty much it, all right? M3 IFVG plus sell side liquidity sweep. All right. One thing, I have a lot of questions on that, you know, either on YouTube, or let's say Twitter, of people asking me, do I use SMT divergence? You can use SMT divergence for extra confirmation. You know, lower time frame SMTs are really good. So let's say here ES didn't sweep that low and NQ did. That would have been an extra confirmation to take the longs, right? But you don't want to frame your trade just based on that. Isn't there too? Is there any other questions? Do you consider the turtle soup as confirmation? Yeah, basically, like, good question. If we enter the gap and we do not close a singular handle aside of it, that's a huge confirmation of, you know, aggression from those buyers. That's what you want to see. If you start digging super deep inside the 15-minute gap, it starts to be, you know, pretty pretty 50-50. But if you tap the gap, cannot close a singular handle inside of it on the time frame you're looking at, plus you add the inverse, you have a sell side sweep, 15-minute gap, M3 IFVG, and it's super aggressive, so it's on the fourth candle, plus the Judah swing, plus generated buy side above you. Some people are just taking trades off of equal highs or equal lows, you know, just based off of that. Now you have 4 confluences, so like you're not taking your trade on something that is not repeatable in the long run. You will always be able to, you know, locate 15-minute gaps or IFVGs on the lower time frame on a pair that is so volatile like this one. All right, the 1-minute chart actually means something. So then, boom, that's the first trade that we saw on Monday. All right, a lot of confluences on this trade, really, really good. I liked it a lot. All right, then boom, let's go on the next day. Because I'm looking at my journal right now. I'm not gonna, you know, waste too much time going back inside the day, because I'm gonna start backtesting with y'all in pretty soon. So the second trade was on Tuesday. All right, what are we looking at? 15-minute gaps plus IFVGs. So also, yeah, one thing I forgot to say was that you need to look at RTH. All right, RTH gaps. That's the second model also. If you see an RTH gap, you want to, you know, find an inverse at the top of the range to then, you know, target that RTH gap, because we usually see a fill of that fair value gap, of that, you know, opening range gap that we call, so RTH gap, in the first 45 minutes of the market open. That's usually what we see. If ES enters inside this opening range gap, but NQ doesn't, this is where you would either take profit or put your stop loss to break even. All right. Do you guys hear me well, or is it a little bit weird? Tell me, guys, if you guys hear me well, or I should bring the mic a little bit closer to me. Till what time do you look for a setup? I mean, you can look for a setup whenever you want during the New York Open, New York session, basically. All right, it's good, perfect. All right, we're just gonna keep going then. All right, so let's say right here, another possible trade you could have caught was entering inside this IFVG right here. All right, so here you see we have a bullish, so we're bearish biased because of the RTH gap. What are we basing this trade off of really is the 930 Judah swing. All right, 930 Judah swing is a fake out, is a move where you should go, you go in the opposite direction of where the real draw is to just field bigger orders. So 930 opens, shuts up, right? We have an up move, but we're trading above yesterday's close. If we're trading above yesterday's close, what does that mean? It means that we're currently at a premium. And if we're at a premium right here, then it means that, you know, passive sellers will be interested in price because the shares are traded at a premium, all right? And the buyers are most likely gonna, you know, start being greedy, and they will get squeezed at the top of the range, clicking on aggressive buys. So what are you looking for here? Possible shorts off of that IFVG, right, at the top of the range. So right here you would look for a 1, 2, 3 minute IFVG. So right here on the 2 you don't have anything, 3, 5, nothing. So it would be on the 1. So if you want to use the 1, it would be this one right here, which would align with a breaker. All right, so breaker block plus IFVG. So then as soon as you close below that fair value gap, this is where you would go short. So exactly right here, sell with your stop loss above the high, boom, and then you either go for a 1-to-1 or you go for the opening range gap fill immediately. So if you go for a 1-to-1 or put your stop loss at break even at a 1-to-1, which I think is still a really good decision, this trade would have been profit. And if you didn't and you try to let it ride all the way here, make sure that you see if there's any SMTs. If there's no SMTs, then this would have been a loss. All right, so here you put your stop loss right here, boom, your take profit right there. All right, you see, like, you could put either your take profit right here or right there. So 1-to-1 would be here. Can I put like more? All right, you know what, I'm gonna enter, let's say 6. Yeah, I don't know how to trim on TradingView, but basically that's the trade. So you pull back to the breaker, hold, then taps your 1-to-1 level. If ES swept this low, which I cannot really confirm right now, you would have you need to be break even or take profits. And then let's see what it does. It just pulls back to the upside. All right, so if you didn't take profit or put your stop loss to break even at that 1-to-1 mark, you would have been stopped out. All good. Is that bad? No, you're gonna see later when we're gonna be backtesting. So the second trade of the day was PM session. So let me go here again and click on ETH. So we already, let's say you took a trade off of the RTH gap. Then right here was your second trade. So you see right here, basically we have a 15-minute fair value gap plus a 15-minute order block. Okay, what is an order block? An order block is just a break of structure. Order block means price created a high, a low, and a higher high. And that block right here is a zone exactly like fair value gaps are. This is a zone where you expect buyers to hold that break of structure to create a new high. That's just it. All right. So as soon as you see that order block, what do? Boom, you wait. You wait and see what is the reaction from it. So you have a fair value gap aligned with that order block. So then you go down to the 1-minute chart and you see, all right, is there a singular leg with one fair value gap? Okay, when we tap this 15-minute zone. So let me just get that away. So we swept internal sell side right here. We tap into this 15 and we have on the 1-minute chart only one gap right here. All right. But if you go up a time frame and there's a gap on the 2, let's say up here that we didn't disrespect, you cannot enter off of the 1 because you always have to look at the highest time frame from the 1 to 5 to confirm if there's a gap. If there's a gap here on the 5, you cannot long off of a 1-minute inverse fair value gap. That's again one big mistake people will make in backtesting, is that you need to make sure that the time frame you're looking at is the right time frame. So right here I'll go on the 2, big fair value gap on the 2. So you're like, damn, all right, I'm gonna use this time frame. All right, perfect. So then what do you do here? Swept sell side, and as soon as you see this, you have a break of structure to the upside after the sell side was swept plus the 15-minute gap was tapped. So right here, this is a really good confirmation to go long on the pullback to the IFVG, stop loss below the swing low, and then you target the most recent high for a 1-to-1. All right, that looks like this. Boom. And then let's see here that where you would get filled. And then right here, this is where you would trim your profits. That's the second trade you could have got. Really good trade. Based on the 2-minute chart, we found the time frame where we see one gap. As soon as this time frame get disrespected, this is a go. This is your go-to long. All right. So that was the second opportunity of the week using the same framework again. Any questions? Good question. How to handle losing streaks? Do you guys have any? Do you guys have any idea what is the best way to handle a losing streak? Oh, good question you asked. Are these continuations or reversals? They're continuations on the higher time frame, but they're reversals on the lower, let's say. Because on the lower time frame, let's say you're looking at a 15-minute gap here. You want to see the leg that enters inside this 15-minute zone. You want to see aggression from the bearish side. Okay, so here you would want to reverse the market on the 1-minute chart, but on the higher time frame, this 15-minute gap is telling you that the bias is bullish. That's really it. So it is a continuation play on the higher time frame since you're looking at a 15-minute zone, but it is a 1-minute, let's say 1 to 5-minute reversal. All right, that's pretty much it. Don't lose, size down. I mean, the best way to handle a losing streak is have so much data on your edge that you're going to get out of that drawdown one day or another. That's really it. You cannot cheat this game. You cannot make any shortcuts. For you to have a good mental health when you're on a losing streak, the only way to do that is through years of backtesting, having so much data that you trust your strategy to death. You're gonna make it with that strategy if you keep going, if you keep putting on trades, keep doing the same analysis. You have to understand that sometimes the market is different. It's gonna have weird price action for your strategy, for your way of reading the market. It is always gonna happen. It's always gonna be this way. Some market conditions are more breakouts, trendy market conditions. Some market conditions are more, choppy, accumulation on the lower time frames. Some are more, are more range bound. So depending on your strategy, you will face drawdown periods no matter what. All right, but the people that can't make it are the people that as soon as they're gonna see that loss streak happen, they will look for another strategy because they think every single strategy wins. Let's say they think that if they find another strategy, they will win all the time, when it's completely not true. Any strategy that you will ever find or trade, you will see losing streaks from. All right, don't believe anything you see on Twitter or on internet. You will lose your ass sometimes. All right, you will lose your ass. You will go into 5-6 trade losing streaks with even a 1-to-1 or a 0.8 risk to reward. It will happen to you. But the only way for you to keep a good mental health is know that you have so much data. You know that you did the work in the past to make sure that what you're trading is profitable and will get you out of that drawdown one day or another. These are this is the statement of someone who actually wants you to succeed. If someone is telling you, don't backtest, just switch strategy because your strategy doesn't work, your strategy, most likely, let's say if you are following your plan every single day and you're not making money, your strategy is probably ass. That's first thing is being able to acknowledge that fact. But if you have so much data but you're still losing because of other factors, let's say like psychology or risk management, or you're comparing yourself to the industry so much, then this is a different problem. But that's pretty much my the best possible advice I can ever tell you. For me, it's just backtesting. I know you don't want to hear this, but that's just the truth. It's like, how do I go pro in soccer? Like you just play every single day till, you know, as soon as you're gonna get so good at something, you don't even want to do it anymore. Like you don't even find any pleasure from doing it anymore since you've done it so much. There's not even any dopamine from it anymore. It's like, let's say it's like this for everything in life. If you go to the restaurant every single day, one day or another you're gonna be bored. Like the food is gonna taste ass, and you're gonna want to come back to your mom's food. It's the same exact thing. If like yeah. What trading condition make you avoid trading for days sessions? Not There's not any market conditions, let's say, that would make me not trade. But let's say if I go into a loss streak and I see that my edge is not working right now, I will start decreasing risk and really looking back at all my trades and see how how did I mess up on this, let's say, these market conditions. Should I be a little bit more picky? Should I wait for price to, reject the low totally and not close inside of it, and etc., etc.? So a lot of factors go into it. So you just want to analyze your trades more carefully, and adapt a little bit your strategy. Do you want to wait for an SMT? Did the SMTs work a little bit better in the last few weeks? If you only waited for those kind of confirmations with the IFVG or etc., etc., if what is another model that I'm trading, was it good during that time period? Would have If I traded it, would I be down on my drawdown, etc., etc.? There's a lot of things that goes into adapting to the market conditions, but you cannot know that. You cannot look at a market and be like, okay, this market right here, I shouldn't trade it. It's not this. You just need to adapt your strategy to it. Do you always have to trade with a clear draw, or will you just play a quick scalp based on bias and order flow? Yeah, that's a really good question. Like, people think, let's say there's two different type of people in this industry. There's the people that frame their trade based on a higher time frame analysis, and the fact that they think a higher time frame high is going to be taken out, or they form a bias with the weekly, looking at the weekly chart, the daily, then scaling down from to the 4 hour, the 1 hour, and then finding their bias from that. And they use the daily profiles, and the correlation between Asia and London, and then they frame a trade. So it's an approach, but there's also the approach where you just don't even look at the bias and you trade purely off of order flow on the lower time frames. You could make money off of that for sure. The 1 minute chart gives you at least, like, you're gonna be able to make 15-20 handles every single day by following the same kind of analysis one day or another if you keep going. So I think there is money to be made in scalping, and I really like that scalping approach more than the day trading. Why? Because exactly like we talked about, the market condition will make you lose so much if you are the kind of trader that wants big distributions. If you are always looking at a chart and you're like, okay, this weekly high should be taken out, we should put in the accumulation on Monday, then the lower portion of the wick on Tuesday, this should be the low of the week, then the market structure shift on Wednesday. Like, if you do this and you're stuck in market conditions where it's range boundy, you're fucked. Like, you're gonna get cooked. All right, like, trust me. So depending on your edge, I think that scalping, looking more at order flow, the order flow side, is more versatile in every single market conditions. Yes, you are gonna make less than someone who's trading higher RR when the market is gonna start ripping. Yes, but you will lose less and you will make more in the market conditions where it will not trend, it will not go to the weekly and the daily and the 1 hour draw on liquidity, because you are a scalper. It's just that simple. In my opinion, the lower the time frame, the more data there is, and the more adaptable your strategy can be, since there's more data. That's just it. It's that simple. So I think really good question. Like a lot of people think that this way of trading is like a noob. Like I don't know why, but too many people think that if you look at the at a lower time frame, you're a noob, or if you don't have 1 to 5, 1 to 6 risk to reward, you're a bot or you're a noob. Let's say you're using like a gaming gaming terms. That doesn't have to do with anything. Like a lot of people are making money off of just a 1 minute chart. You don't even, like for me, let's say with my, I have my own strategy, that my core strategy, and the framework that I use personally. I don't go above a certain time frame, and it's not even the 4 hour or the daily. So you don't need to frame a daily bias, a weekly bias, and look at the news and this and that. No, like if you look at the 1 minute chart, you will find a way that you can find a framework that will deliver you 10 to 15 handles every single day. That's just all you need. If you're not satisfied with that, then what do you want me to say? Your job as a trader is to make money, not to flex on Instagram or TikTok that you top ticked a range. Nobody gives a singular fuck about top ticking or bottom ticking or swooping this or high RR that. Like your job is to make money. There's probably people in this world that have a 0.3 risk to reward and are multi-millionaires, or 0.5 risk to rewards, but they don't talk to you and you don't see them often because social media is just a pool of people that you cannot really differentiate who's real or who's not. That's really it. So most of y'all think that one-to-ones are ass, or this is my most common question asked every single time I launch a stream. Why one-to-ones? Why this? Why that? Because it is the RR where I find consistency backtesting. If I go more than 1-to-1, I see with my own eyes that I'm starting to get ripped off by some market conditions, and I know it will happen to me at a certain point. I know I will go through a loss streak, but if I have a higher RR than a 1-to-1, this strategy is not suitable for me because I will literally lose my mind over that loss streak, because I've seen extremely huge loss streaks even with a 1-to-1 risk to reward. Imagine with a 1-to-3, 1-to-4, 1-to-5. These are most likely people that are just trading blindly because they don't have the data. You know that the market doesn't give you an opportunity every single day. It does not give you big swings every single day. That's one thing you need to make sure you understand about this market. It's sometimes like the futures market, especially, like it's not the same for stocks. Stocks are way easier to trade, in my opinion. It's just the barrier of entry is harder to enter on the stock market because you need, let's say, 25 to 50k USD to just launch, to just enter the brokerage, right? But let's say on the futures market we see big swings, then huge like days and weeks of accumulation. And if you're stuck in that and you have high RR, you're cooked. You're literally gonna give everything back. Price goes from finding value to distributing, finding value again, distributing, finding value, distributing, finding value. People are gonna be, price is gonna come back to a fair value every time there's gonna be big distributions. If you don't catch those, or if you're not performing well in those days, if you have high RR, you're cooked. Hopefully this changes your perspective, because I see too many people think that they really think that trading a lower time frame strategy or just finding something on the lower time frame means you're ass, or means you cannot predict the market. Nobody gives a shit about forecasting the market. Trust me, brother. Like, your job is to make 10 handles every single day repeatedly, and that's it. 15-minute for value gap, it tap into liquidity, move to lower time frame, and wait for a single. Yeah. But if we will keep trading in bad market environment on the same strategy, you will be in a big drawdown. This is trading. You will be in big drawdown sometimes. There is your fee to know that you're in market conditions that are not good for your strategy is losing. Then once you start losing, you will adapt. And when you will adapt, then you will grow. Then your strategy is going to be more suitable for those market conditions. But if you don't take those losses, how do you know? You just look at the chart and you're like, yeah, right now we're range bounty, and yeah, I'm not going to take trades. This is just gambling. Yeah, I will rate the setup. This is a good comment right here. Do you log off after a win, loss? Is it one bullet per session? To be completely honest, my main core strategy, let's say with the framework I use, it's super like, it's super demanding from the market. I don't see a lot of trades because I understood that the lower your trades, the lower the amount of trades that you will take in a month, the higher your win rate. That's just a positive correlation, right? The more trades you're going to take, the lower your win rate, because the chances that you will see good market conditions every time are pretty slim. So yeah, have a low amount of trades. So yeah, most of the time I only take 1 or 2 trades. But if I see my strategy showing up on the chart, I could take 2 trades in a day, if that responds to your question. I'm cooking on the 1 minute. People diss it because they do not understand time and higher time frame. Literally, it's exactly this. A candle, right? If we just take a candle, all right, this is gonna be my next video, but you see a bullish candle, all right, like this. What is a bullish candle? I can take this candle. Let's say a 1 hour candle. A 1 hour candle, you can know exactly what's happening inside that 1 hour candle if you just go down lower time frames. On that 1 hour bullish candle, this is the open, this is the close, this is the high, and this is the low. All right, so let's use this. All right, let me just explain to y'all why most people are dumb looking at this. All right, so open, close, and then this is the high. But one thing that people don't understand is that, yes, this is a 1 hour candle. What do we expect? We expect to see accumulation at the beginning, then put in the low first of that candle, market structure shifting, and if that market structure shift holds, then you're into a big possible trade, because that 1 hour candle is most likely going to keep distributing, then pull back and then start accumulating again. Once you know this, all right, I know that this right here is what a 1 minute chart would look like if I can anticipate only one candle on the 1 hour, on the H1. All right, perfect. You know that, you can understand that. But do you know that this exact freaking candle, you could anticipate a candle like this if you're looking at a 15-minute chart, but that structure right here will be the same as if you're looking at a 15-second chart. That's the difference. So then people who will look at you and be like, yo, you trade on the lower time frames, you cannot predict big swings or where price is going to go. Like, I can't understand that statement, because price is fractal. This would be the 15-second chart on a 15-minute bullish candle, right? Or this would be a 1 minute chart on a 1 hour candle, or this would be a 4 hour candle, let's say, to the left, and this would be a 15-minute time frame, and the daily would be the 1 hour. So price is fractal. Just find what works for you. So boom, man, we yapped a shit ton. So this is the second trade again. Right now you sweep sell side, you see swept sell side right here. All right, after you sweep sell side, you start displacing to the upside. You create again that same formation we had. We have an order block and we have a fair value gap on the 15. We have those two confirmations. We know that, all right, right now we just swept sell side on a higher time frame. We're bullish. We're forming bullish fair value gaps. We're bullish, okay, on the 15-minute. We just created an order block. We're bullish. Now let me scale down to a lower time frame once we tap into this zone and see if I can find a reason to enter back into longs following those buyers. All right, then what do? You scale down to a 1 minute chart. Boom. What do? You wait for price to tap this. As soon as you wait for price to tap this, then you will start scaling into time frames 1, 2, 3, 5. So boom, enters this zone aggressively. You're like, all right, So this is a gap on the 1 minute chart. All right. So then I need to make sure that there is no gaps here inside this range on the 2, 3, and 5. So right now we entered, and you see this big, this big down move. Now I have to, I cannot just look at the 1 minute chart and be like, okay, as soon as we disrespect this gap, I'm in longs. No. Why? Because there could be a higher time frame than what you're currently looking at that has a gap above, like sitting right here. So you would enter a trade looking at the 1 minute chart, not knowing that on the 2 there's sellers located right here. So let me go on the 2. Boom. If I go on the 2, exactly here, there is a gap here on the 2. Perfect. Now let me go on the 3. There's a gap here on the 3. All right. So even if we disrespect this gap on the 1, I would have to wait for a closure on the 3. So now you start understanding timing, the timing aspect more. Or same thing for the open, high, low, and close. What do you see? We have the previous candle being bearish. All right. Previous candle being bearish. If we sweep that low, all right, so we have a bearish candle. Because so many people are just obsessed with power of 3, which you are right. Like you need to be obsessed with that framework. It's literally the only thing you only need. The only thing you actually need with ICT is understanding the power of 3 concept. But right here, you see the previous M15 candle was bearish, and then we have a 15-minute gap just below us. What does that mean? All right, I'm going to tell you exactly what's happening again inside your head. It should be that, okay, if we open right here and then on the new candle and then we go down first, okay, if this next candle is going to be bullish, what we will see is the lower portion, so the lower wick, so the down wick of that bullish candle being formed first, an inversion for value gap, which is going to signal that, okay, buyers are the one controlling the market. So you're predicting that this candle is going to close bullish by seeing an open low, tap into this gap, and then as soon as you see that inversion for value gap, you go in longs, and then when that 15-minute candle closes, you could get the fuck out. All right, it's the same thing. So you're predicting that when you're sweeping the slow, tapping into this zone, the next candle is going to close bullish. That's basically it. If you want, a deeper understanding of what's a candle, I have a video on it that's going to, I'm going to put it out like really soon. But that's really the principle behind it. Like if you want to be in more, better trades, then using this framework is going to be really, really good. All right. But it doesn't mean that you will have it every single time. But like this, if you can understand the power of 3, in this case, it's exactly the same thing. So we open lower on the new 15-minute candle. Now, let me see. We have a 2-minute gap, a 3-minute gap, but then the only thing I didn't look for is the 5-minute. Now I got to look at the 5-minute and boom, big gap right here. So now, since a 5-minute gap got created, I need to wait for the 5-minute gap to get disrespected, which is a super big, mistake that most of y'all make in backtesting and are going to be telling me, yo, Amos, I backtested your strategy. It has a negative win rate. Are you sure you're backtesting with, like trying to get better every single time and really looking at all the time frames and annotating your charts? Or are you just looking at a 1 minute for value gap and then boom, you're stabbing it, not looking at other time frames or looking at the reason why you possibly lost on your trade? Then right here, I need to look at the 5-minute inverse because this is the higher time frame, the highest time frame inside these swing points. So from the swing high to swing low, this is the highest time frame. So I'm not even bothering looking at the 1 minute chart anymore. I look at the 5. I don't give a shit. Then when you see that 5-minute inverse, boom, what did we talk about earlier is the 4 candle pattern. 1, 2, 3 creates the gap. The 4th candle disrespects it. This is one of the best order flow confirmation. All right, so one of the best order flow confirmation to tell you, all right, those sellers right here are getting absolutely squeezed. If they get the chance to get out of break even, they will do it by clicking on buy, which will drive price back to the upside. All right, so then what do you want to see? As soon as you see this, boom, you need to go long. one thing I will tell you is that the higher the time frame, the more chances you have to see a pullback to the covering area. What is the covering area? This fair value gap. Let me just use the market auction theory so you can understand what's happening better. All right, let me just reproduce this range. So boom, swing high, then we saw swing low, and you see there is a bearish fair value gap right here. Gaps for me are areas where aggressive buyers or aggressive sellers entered the market. Right here we created a bearish 5-minute gap, which tells me that there's a lot of aggressive sellers, right, inside. So from this candle's low to this candle's high. Right now, what do I wait for? I know that sellers are located right here. So if we're truly bearish, we should respect the zone to create new lows. But if we are bullish, we will disrespect it. But what you guys don't understand is that a lot of sellers are going to try to add, all right here inside this zone on passive orders, which is going to fill all the aggressive orders from that inverse. All right, what's really happening inside the market is that a passive buyer, let's say a passive seller, will sell the shares to an aggressive buyer because he just wants to be in the market as soon as possible. Or a passive buyer will buy the shares to an aggressive seller. All right, aggressive selling is what moves the market to the downside. A passive buyer will be the one exchanging with him. So right here in this case, there's a lot of passive sellers inside this fair value gap. So what do you know? If they are being disrespected right now, okay, and this is a big institution, what will they do? Most likely is that they will start selling a shit ton of shares. All right, let me do it again. They will start selling a shit ton of shares. Reasoning behind it is because their positions are currently in drawdown, and when they're going to start selling a lot of shares, it will push price down since they're whales. And then once they will have the chance to go break even, they will click on what? If they sold, they will click on buy. This is why when you see inversion for value gaps, it's a really good confirmation of a cover, because a lot of people are going to click on buy at the same time. This is why you see such sharp moves, and you can anticipate that when you see an inverse, price is going to start ripping because it's an order flow confirmation. You disrespect this gap, you know, okay, we're most likely going to pull back towards this gap, so sellers will click on buy to get out of their positions at break even. If they sold in the first place, they need to click on buy to get out of the position. So then boom, everyone will be clicking on buy. The buyers right here that, push the price to the upside, plus the sellers are going to click on buy, so price is going to rip to the upside. That's, the background story and the market auction theory behind what is a gap. So boom, now that you know that it's a 5-minute gap. What can you expect? Since it's a 5-minute gap, you can expect cover to happen inside this 5-minute. Boom, and then you would, when you see like stacked highs like this, you could definitely, target those highs rather than just a 1-to-1. So right here, it would be a situation where you would be at a 1.34 risk to reward rather than just, a straight up 1-to-1. So right here, let's see. You go in longs at the pullback right here. So you wait, price goes down. All right, we're gonna see it in real time right here. Price goes down towards this gap. You see, I don't want to see price closing below this zone. Why? Because this is the zone of covering. Sellers should be getting the fuck out of their position. All right, they shouldn't be interested in selling again. So I don't want to see any candle closures right here. Right, they should be covered. So if we keep wicking this box right here, which is this fair value gap, it is a good confirmation that we're going to see cover. Boom, we wick again, and then look, boom, back to the upside towards buy side liquidity. So what's really happening right here on the lower time frames is covering. You never saw any candle closures below this fair value gap. Why? Because sellers were not trying to push price down here. They were trying to get out of the position at break even. All right, that's really it. Damn, that was like a yapping huge yapping session for now. Like we're only at the third trade, did not even start backtesting yet. Holy shit. Oh my god. Is there any questions? I always trade 1-to-1, 1.1 to 1. People who say 1-to-1 is ass are liars. You don't need her. Yeah, you don't need it. Trust. Yeah, it's all about making money. Like you will see people trading like, you know, moving averages that are going to be making so much money. You cannot say anything to them. It's like making fun of someone for having a certain motion in basketball. Like, bro, even if the guy shoots like this, but hits every single shot, what are you going to say to him? What? Even if he does not have a motion that most people use, what can you really say to him? Nothing. He's better than you. He makes more money than you, or, you know, exactly like boxing. Like, even if someone has a weird stance, or, you know, remember, like, Mike Tyson, bro, he's doing this. Like, peekaboo. And people were shitting on him in the beginning, but you see, no one can talk to him. He's the best to ever do it. Just find your style, and if you're good enough, people are going to start, you know, appreciating you for what you're doing. Thanks for the golden words. Would love to see backtesting. Yeah, I'm gonna start backtesting soon, but it's not gonna be a long backtesting session since, you know, I yapped so much. Sir, I use your tweets to make my playbook for setups. That's good, man. Good job. Why don't you use TradeZilla? It shouldn't be better for backtesting. No. TradingView is not better because you can see the candles. Let's say if you're using 1 hour candles or 15-minute candles to frame your trade, then you see the candle already forming when, let's say, we tap the gap. And on TradeZilla or on FX Replay, let's say you don't see them. In what kind of market conditions the strategy don't work? I would say when there's low volume. When there's not a lot of volume traded inside the market, usually what you're going to see is order block at top of ranges holding. And what's happening, let's say if order blocks at top of ranges are holding, it's exactly, let's say you have a swing high here, and then you are trying, let's say you have this, and then you pull back and you see an inverse right here. What is most likely going to happen is that when there's low volume, highs are so strong. Okay, it's like support and resistance. Traders are going to be the one making money. So, but when, you know, the volume is going to be high and there's going to be a lot of, you know, liquidity in the market, then, you know, you're going to see price ripping through highs and lows. All right. So that was, again, that was a third trade you could have caught this week using the same exact framework. All right. Same exact framework. That's the most important. Find something that is repeatable, that you can catch 10 to 15 handles every day. Then right here, the next trade is in the PM session. Can you please share your backtesting data insight exclusive to live viewers? Yeah, for sure. I'll do this when I'm going to be backtesting. But the next trade is right here. So I'm checking my journal to just not waste time. But right here, you see, like, this is a really good representation of how good gaps are. You form a bullish fair value gap here on the 15. You see it plus an order block. So you're like, all right, this zone right here is a zone where I expect buyers to step in again to defend their position on the higher time frame so we can create a new high. That's your thesis. All right, perfect. Now you will scale down to a 1 minute chart. That's the first time frame you want to scale down to. If you enter this zone aggressively and you have one leg from swing high to swing low with one gap, you can trust that the gap here is where sellers are actually located. All right. And if we're truly bearish, we should respect this zone, and sellers, even if we're tapping this 15-minute zone, sellers should step in again and defend their position. So right here, what do we see? Boom, exact thing. That's the best kind of confirmation you can see. Price taps the gap to the tick, right? You see this line? I'm gonna draw, you see this small line right here. If I go to the 15-minute chart, look at the precision of that. That's the exact line. We tap this zone. That tells me that the time frame that I'm looking at is not random. Why would it tap this zone exactly and did it also 3 other times on the week? Couldn't close a singular handle inside of it. Then, as soon as we disrespected the gap that got created when we entered inside this bullish zone, we saw higher. It means that I could be trading something. I could be, I could be onto something. So you see, swing high, swing low, tap the gap, can close a singular handle inside of it. Perfect. Where are my sellers inside this zone? What is going to happen next? Most likely a cover. Sellers right now are being squeezed. The institutions that went in short, all right, from this zone right here, they told us that they went short because of the fair value gap. This low couldn't trade into this high. So the first candle's down wick couldn't trade into the third candle's up wick. Perfect. That's selling aggression. Now, what is going to happen? They're going to have to cover the position. So what is covering? It's going, so right here would be selling a shit ton of shares to see price going back to where they initially started the move, the down move, so they can click on buy to get out of the position at break even. So price, everyone will be buying at the same time and price will go up. So now let's wait. We wait for price to pull back. Boom, covered. All right, that's what we want to see. You don't want to see price closing below. Yeah, you want to see price, closing through this small box. Perfect. Close through the small box. Let's see what it does. I'm gonna have a 1-to-1 risk to reward right here. Enter it on the pullback. Stop loss below the slow, and then targeting a 1-to-1 right here. Again, you can have a 1.25 to 1 targeting this high here, putting your stop loss at break even if at a 1-to-1 inside this week. So right here, boom. You see the cover. Covering happened right here. Like you saw it multiple times in this live. That cannot be random. Then, boom, you create that order block pullback, and then boom, you shot above this high. So again, another trade you could have caught using a similar framework. Any questions on that? You see, tap the gap to the tick. I'm on the 15-minute chart. You guys see the chart? Oh shit, you guys don't even see that. Do you guys want to see the time frames I'm looking at? I think it's gonna be better if you want to rewatch the I think like this would be better. Is this better, guys? Tell me if it's better. I think if I my fault if I didn't do it in the first place. I feel bad. All right, so let's go and do the last trade of the week using the same exact framework. Of course, there was a loss here. You could see losers. All right, I'm just showing you the best trades you could have caught. And if it was only 2 wins, let's say if it was only 5 wins, 2 losses, then you're still up 3 Rs. What are you? You cannot start bitching about being up 3 Rs. You're able to predict price. So at that point, you cannot demand too much from the market. All right, so then next trade is here. So boom, swept sell side right here, swept sell side. You see, this is what London lows to the tick start pushing to the upside, forming what? A bullish 15-minute fair value gap right here. So now what are we going to do? We want to see what's the reaction from this gap, because we know that on the lower time frames, Buyers are the one controlling the market. If I can see an order flow flip when we enter the zone, I can most likely scalp the market to the upside for some quick points. So then, let's see what it does. We tap the zone. Is there any gaps? No. Right here. Is there any gaps when we tap the zone? On the 1 minute chart, there is 2 gaps right here, all right? So one here, one here. So can I trust this time frame being the time frame I want to, being the time frame that tells me where sellers are actually located? No, because there's 2 gaps. I need to find one leg that tapped into the 15-minute zone that has 1 gap. Okay, so I can trust that time frame to see the squeeze and the the covering that I was talking about earlier. You see, again, we tapped it to the tick, like the tick, all right? And again, this is a new 15-minute candle opening. The previous 15-minute was bearish. You can see here from the timing. The new 15 starts at 10:15, closes at 10:29 and 59 seconds. Right here, closed. What do we see? First, we see price accumulating, creating the low of the new candle, shifting above price. Boom. If we hold here, this candle is going to close bullish. We're most likely going to see price ripping. All right. So what am I going to do here? I'm playing off of the 15-minute bounce, power of 3 on the 15. Now I want to find a time frame where my gap is located on the 1, 2, 3, or 5-minute chart. So here on the 2-minute, this is the gap. Can I trust the 2-minute chart? I could, but there's a 3-minute just above. Wait. No, I'm tripping. Am I looking at the right thing? Right here, let me see. Yeah, so there is a 3-minute. So there's a there's 2 gaps right here inside this range. 1 minute, 2 gaps here. Then if I go on the 2-minute, there is a gap here. So we disrespected the gap on the 2, okay, but not on the 1. All right, can I trust the 2 if we disrespected the gap on the 2 but not on the 1? Yes. All right, then if I go on the 3, you disrespected it right here. So would you want to engage right here at this close? No, you would want to wait for the price to cover to see the covering and then be in for longs. So then right here, let's see what it does. You also see, let's say, a 5-minute. Let's see, we have a 5-minute. You don't have any 5-minute. All right. So then right now, you could decide to enter on this 3-minute chart. All right. 3-minute chart on the pullback for a 1-to-1 scalp. All right. So boom. Like this. All right. Let's see what it does if we see the pullback. Huge pullback right here. We get tapped in right there. Price holds, then boom, rips towards our stop loss. Boom, L. All right, take your L. Take your L. You just caught literally 4 wins by now. That's your first L. You're like, all right, I can still look for a possible reaction again from this zone. All right, I was willing to buy here. I thought this market structure shift was going to hold. This candle was, telling me that we created the low of the 15-minute candle. First market structure shifted. I thought we would, find buyers inside of this range when we squeeze those sellers. Perfect. You lost. It's one thing I wanted to show. You lost here. Perfect. Can you take another trade with the same framework right after? Of course. Right now, we just re-tapped into the zone. The lowest point where we filled the gap was here. So now we swept this low. I can re-look for a long. Now, 1-minute chart, this is a good trade, right? There's only 1 gap. So now you're looking for an inverse of that gap. But now, what do I need to do? Go on the 2, right? Is there more gaps on the 2? The gap on the 2 is right here, right? So I need to use the 2-minute for now. If I go on the 3, there's this 3-minute gap. If I go on the 5, there's also a 5-minute gap. So right now, the gap is located at the same place on every single time frame. If I disrespect this gap, I will trust it with my life. So I stay on the 5-minute since it's the highest time frame. You sweep. This is an open low of the new hourly right now. So you see the new hourly candle opened, went lower, so we think we're creating the down wick of a bullish candle first using different frameworks. Boom, we disrespect it. We disrespect this 5-minute gap plus creation of a 5-minute order block. All right, so we just swept an internal low into a 15-minute zone. We're bullish. We created a bearish for value gap that got ran through. We created an inverse bullish for value gap, which is bullish again. We created a bullish order block, bullish again. We have stacked highs above us, bullish again. All right, so now what do you want to wait for? Price to pull back here. Right here, to be honest, you can enter market because you would be a dick for a tick to not enter market because you're really close to the area where this fair value gap is located at. So you don't need to wait for the cover. So right now you could just enter, stop loss below this swing low, target, 1.25. So right here you would go long. We're gonna get the fuck out right here. All right, 1-to-1 risk to reward, got the fuck out right here. All right, but make sure you always look at SMTs. All right, look at SMTs. Look at if ES took out the range high or the range low. If yes, then you gotta trim. Okay, you cannot demand too much from the market. So that was it for the recap. There's also another trade I didn't go through on the RTH gap fill strategy, which is right here. So this was a trade. There was no inverse right here, unfortunately, but you saw price sweeping an internal high, market structure shifting right here. Let's say if your entry model is inverse, then it's better to just not take those kind of trades, but just see what's happening when you start seeing buyers being squeezed at highs and sellers starting to be aggressive. You see a gap fill in the beginning of the day, using that Judah swing framework. All right, gap is filled, and then look at what price is gonna do. Goes down, fill some more. All right, that was another trade you could have caught. Any questions, guys? Man, I think I've yapped so much. My brain is fried right now. I don't know why, but I feel fried. I don't know why. I actually feel fried, bro. Any questions, guys? So how many trades to take max per day? 1 or 2? 1 or 2. If you won on the day, it's better to get out. All right. So we're gonna go and backtest. All right. We're gonna go ahead and backtest a little bit, and yeah, that's what we're gonna do. All right. So we're gonna backtest the gap fill strategy. I think it's better for now because it's a strategy that not a lot of people are familiar with, so it would be good to do the backtesting session on that. Plus, I think this would be the strategy that I would do a series on YouTube with. That's really about it. So I'm gonna go grab some water for it's gonna take 2 minutes, and then we're gonna do a quick backtesting segment. All right, I'm gonna go. Let me go back here. If you want to put up your chart, your own chart, it would be. I will start January. Let's just do January, and then we'll make we'll annotate the data. You know what? Do I go on TradeZilla? Because if I go on TradeZilla right now, we're gonna have let's say the data, so I can just share it to y'all. I think it's better if we go on TradeZilla. Let me just go on TradeZilla. was a big crack. Dashboard. Got smoked. This Friday I got smoked. But yeah, I cannot trade tomorrow. I have to bounce like right after this call. Backtesting. So boom, create a session. We're gonna do it together, you know. So let me see here. We're gonna create the session together. So right here, let me see this, boom, and then backtesting, Google Chrome, boom, do this right here, bring it all the way up like that bit. Perfect. So we're going to launch a backtesting session. How are we gonna call it? We're gonna call it gap fill IFVG strap. Description, YouTube. No, futures. I don't have any playbooks for here right now. So futures, we're gonna do NQ. We're gonna start with initial balance of 5,000, and we're gonna do, you know, June. Let's say what? Now we're gonna start from the beginning of the year, so I have all the data. Every time I go live, let's say we would do this. Also, it would be better. So like right here, and then all the way to now. So it would be like 26. So create session. So boom, remove indicator, load layout. I already have one already set up, gap fill. All right, so let me see how it looks on the stream. All right, that doesn't look bad. That doesn't look bad at all. Let me do this though. All right. That doesn't look bad at all. So I'm going to close this and do this. Perfect. So right now I'm gonna go grab some water for like 2 minutes, and then we're gonna start the backtesting session, which is gonna be about the gap fill. All right, and then I'll share the data with y'all. So what is this day? Go to next day open. All right, grabbing some water, and I'm gonna come back in a few seconds. All right. All right. Any questions on anything regarding, you know, it could be anything, prop firms, psychology, any questions before we start, just to get that out, and then we're gonna do a backtesting session. If we take a loss, we take a loss, you know, to the chin, and then boom. Like let's say this in this strategy, my goal is to make a a series on YouTube where we take, you know, the core of this strategy and actually build it up in a way that we know exactly what all the losses actually look like, and make rules in order for it to become, you know, a really good model. All right. One thing I like about this strategy though is that it uses principles that are really strong. Let's say like the Judah swing, you know, the gaps are something that is repeatable, and you can measure the size. You can measure how many times did we fill the gap in the year, in the last 5 years, from this time to this time. There is a lot of strong core, um, you know, to that strategy. So I think it's pretty good to use it for our YouTube series. All right. So that's pretty much it. What's up, Lord FX? I remember your name, no? Lord FX. Were you not in my Discord like last year? I don't know if it's you, but sir, why are you doing all this for free when everyone is charging for it? To be honest, what I'm saying is stuff that are most likely already out for free. That would be it. You know, I use stuff, let's say, that I wouldn't say publicly, cause it's not something that it's something that I just want to hold as value for my mentorship students. That's pretty much it. That's pretty much the reason. Like, let's say if I have, let's say, a mentorship, and my mentorship is getting the exact same value from the YouTube, then the mentorship, it's unfair. I passed an eval luckily, so feel out of my debt. So I don't want to lose it. Can I still benefit from joining you? Nah, I don't like those comments, man. I hate those. To be honest, I'm not really gonna respond to that. Like, you do you, but I don't think trading. I think trading is an investing. Like, it's a job to invest your money. Like, you take your own money to make more money. If you don't have any money to make more money, you shouldn't be trading in the first place. It's just trading gets so much easier when you have money. If you lack money, then how can you invest it? Just go, let's say, either just make normal money with a regular job. Then when you're at a comfortable point, you know, either do it. But if you're in debt, I think, you know, it's a hard thing to respond to. Like, I'm not gonna be here to save your life, that's for sure, you know. I'm sorry to tell you that, but all right, we're gonna start with the backtesting session. So I like your model based on retracement into a higher time frame for value gap. Yeah, I have a lot of good videos on, you know, on my YouTube. I have really good videos on my YouTube, you know. Like, the videos with the highest view count are usually the videos where, you know, I go with high RR plays on replay mode, which is, you know, that tells a lot about me, because I don't give a shit about trading high RR. Like, I just stay true to my own system. If I really was looking for, you know, views, I would just be posting top ticks, bottom ticks, which I think is not something that is repeatable in the long run. But let's start with the backtesting session. Enough yapping, and let's go. So right here, January 3rd, 2025, we're gonna try to, you know, take plays off of the gap fill strategy. So we're looking for an inversion for value gap towards the gap. All right. Why? We use the Judah swing being at 930. We have an influx of liquidity that pushes price to at a certain level where it should be a fake out most of the time. Second, we have the gap that is telling us that we are closing above the previous daily close, right? New York close and New York open. So we know we're at a premium. Okay, we're at a premium. And then we have the inversion that gives us order flow confirmations. So right here, January 3rd. Right here, I wouldn't try to take anything right here, being honest. 951, nope. So right here, you have gaps on the 5 that you're still not closing through. All right, so you don't want to engage in that trade yet. So boom. So you have still the unfilled gap right here. You're looking for confirmations to go short to target this gap. All right, so right now you have a buy side liquidity level. You sweep this high, this would be, you would look for potential shorts from this high. So let's see what it does. We sweep this high, would we form a gap on the 1 minute chart right here? What does that gap tell us? It tells us that there's buyers from this candle's high to this candle's low. If we're truly bullish, we should respect this gap in order to create a new high. If we're bearish, okay, which is what we want to see, we will disrespect this gap, all right, and then this will be our confirmation to go short towards gap fill, right, towards the opening range gap. So right now, let's see exactly what it does. Boom. As soon as you see this, this is your confirmation to go short. Depending on your risk tolerance, you could, go short immediately at the close, or, you could require some sort of pullbacks. I think in this case, it's fair to go in shorts right now, since even if you're targeting the gap, you're adding more than a 1-to-1. It would be a situation where if you enter at market and if your target is the gap, the opening range gap, and you're not even at a 1-to-1, this would be a reason why you would wait for a possible pullback. All right, so let's say here we'll use our quantity would be like, we're always gonna enter in 2 cons. All right, so boom, 2 contracts. What I like about TradeZilla is exactly this. You just have to click on sell and put your quantity on the bottom right, and as soon as you have that, let me just increase the size of this. I have to increase the size of this. So boom, so you guys can see. All right, like this. All right, so you guys can see I can just drag my stop loss above the high, drag my TP right here, and that would be it. All right, and I would be in a position. That is one thing that I really like about that, is the fact that it's so easy to put on a trade, especially with inverse. Like, you don't really have to put limit orders like that. So boom, 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 price starts to shoot down, and then right here, this is where you would get out. So one thing I would do, all right, a must, if you're, let's say, if you're broke and you don't have any money to invest into a backtesting, let's say a journaling software like TradeZilla, all good, just use Discord. All right, alternative, you create your own Discord and name it backtesting data. Then when you take you're going to take pictures of all the trades you're taking. So this would be the first trade. You would go on your PC, click on screenshot tool, or just use the what's on the top right here to take a snapshot. Boom, copy the image and then paste it on your Discord. That would be your first picture. You would write down the date. It would be Friday, January 3rd, 2025. As soon as you have this, boom, that's your first picture, first data. Let's go. All right. But you have to go through thousands of that for you to know you have an edge. So the game is not done. Even if you're taking 50 trades in a row that are winners, you could lose your edge over the next 6 months, which would tell you that, okay, your strategy worked in the last 6 months, but right now it's dog shit, so you cannot trade that strategy really. This is the importance of having data. Okay, so right now, screenshot tool, boom, right inside the Discord. All right. What we can do, let's say, I think it would be good is to have, what I do, okay, is that every time I'll take a trade, all right, I will put it in the journal, and then I will send, I will have all the data, all the pictures in the same, PDF, and then I will send it to y'all, all right, through my Discord. So, because the thing is, I have to always do you guys know how to, open in a new tab? No, that's not what I want. I want to, like, my journal to be on the right. That's really what I want. Can you do that? Or it's too advanced? I need to know. Does anyone know how to, just journal immediately from that? I don't know. Journal? Oh, alright, that's good. But I don't know if it's only on this. Let's say we're just gonna take the screenshot tool right here. So boom, I'm gonna take the screenshot, boom, and copy paste the picture. And yeah, that would be my first picture, and I will write down M1, and usually I write down the time, but right here you can see the time. So and we can also see the date here on the 3. So I don't have anything to write down but trade number 1. All right, number 1. And let's see here. Can you guys see what I'm writing down? Oh yeah, you guys can see. Right? That's cool. That's actually cool. All right, so number 1 trade, and then the title will be like 2025 gap fill data. All right, boom, first trade, let's go. Now we're gonna go into the other day. As soon as you take this trade, you can start looking for more trades. And I don't know exactly how to save that, but I'm not really familiar with that, I'm not gonna lie. But let's get that away. Let's see if I still have it right here. Bro, I'm so sorry, like I'm pretty much a newbie with, okay, all right, or we have it. That's good. Good. All right, so now what we're gonna do, you could keep trading, but what we're gonna do for the sake of this backtesting session is trying to just catch gap fill strategy. So we're not gonna start trading the normal inversion model. Where is that journal button located on trading view? I don't know. It's not on trading view, it's on TradeZilla right now that I'm at. I really don't know. So right here, what you would do is go to start of New York session, which would put you at the next day at 9:30. All right, so boom, right here you open, gap up from yesterday's close. What does that mean? We're at a premium, so we're looking for shorts to see a gap fill. All right, one thing I want to point out is with the data, we can measure the size of the gap. All right, so if there was too big of a move during the overnight session, it could be a good thing to not short all the way to a huge gap, because we know there's so much buyers. Plus, one thing is the timing of the gap fill is super important. If you know that on your data, if you try to play the gap fill and on an inverse formed at 10:35 and it's already been an hour and we're seeing price moving to the upside aggressively, it's most likely a bad idea because you're super far from the gap. If you're far from the gap and this is your target, it means that you have a high RR. The higher RR you have, the lower your win rate. So is that really a trade you want to engage in? Possibly not, if you're using prop firms, most likely. So right here in this case, let's see what it does. Right here it's 10 10:18. 10:18. So, you know, I wouldn't really be looking for anything. The best possible trades I would be looking for are like in the first 30 minutes, really. If we could see a gap fill and pressure from, let's say, the sellers in this case, because I really want to utilize the Judah swing concept, which is the 9:30 open should drive us to a point where just feel higher time frame liquidity, then you know, we should see move to the opposite direction. So right here in this case, I would not even be looking for a trade anymore. I would just go to the next day open, or let's see what it does though, but this is not something you would be interested in. You know, this is just a bull trend. So exactly like I said, you don't want to engage in those trades. Right here is a situation where you have no gaps. You see, we opened exactly where we closed yesterday at 4:15. You see here, if I take my crosshair right there, it's 4:15 p.m. EST. All right, 4:14 okay, p.m. EST. Where we open right here 9:30 a.m. and there's no gaps, which means that I cannot find, let's say, an edge off of that. All right. So then, boom, go to the next day open. Yo, Mas, we didn't see a trade from in the last 3 days. It's normal. That's what you need to find, the frequency of trades. If this strategy is actually, you know, worth your time, worth taking, if you have such a low frequency of trades, or if you have this kind of win rate. Right here we had a gap. You see, we had a gap, but we went and filled more than 50% of it. So this would not be a situation where I would try to take you know, the longs, right? The gap was already filled. So then what do? Next day open. All right. So boom, we open lower. We're at a discount. What am I trying to look for? Longs. I want to see price filling this gap. All right. So right here, January 10th, what do we see? We see price pulling down towards higher time frame liquidity pool. All right. Then we have this fair value gap here formed on the 1 minute chart. We disrespecting it. Is that a gap on a 2, 3, 5? All right, that's a good gap that got disrespected. Let's see if we can enter here to see price going to the upside. Let's see what it does. That would be a 1-to-1 play. Buy 2. Stop loss, take profit. Boom. Let's see what it does. One tapped. GG's. What do? Same thing. You don't start tweaking. Immediately take your picture. You shut your mouth and we keep going. That's really it. So right here, journal number 2, loss. Boom. Then let's go and see what it does after. So it keeps going down. Yeah, right here you're really far. So we're just gonna go next day open. All right, open lower. Perfect. Now we have a gap. Same thing. We have 9:30 open going to the downside first. We create a bearish value gap. If we're truly bearish, we should respect the zone. We sweep this internal low from those sellers. Boom, push up. So right here in this case, it would be a scenario where, you know, like I said earlier, if you enter right here at the close, your take profit would be this high. So you would be forced to be in a 0.1 trade. Okay, Donvo kind of trade. So you don't want to be in this. You want to wait for a pullback to this low, or at a point where it would be a 1-to-1. So in this case, right here is a good pullback to this covering area, or like right here, if you don't want to be a dick for a tick. So boom, and then this is where you would, let's say, trim your profits. At a 1-to-1, let's say the real point where you would put a 1-to-1 is this. So right here. All right, something like that. So let's wait and see if we get a pullback. Boom, we do get the pullback right here. So all right, we're in right here. Boom, 2 cons, stop loss below the slow. As you guys can see, it's the same exact trade that we just took and lost on. All right, 930 Judah swing, pushed price down, created a fair value gap on the way down. Now we inversed it. Let's see if we can fill this gap. Hold, tight move, boom, and you take out your profits. That's a really nice move here, really nice trade based on a framework that is repeatable, something that you can find edge in my opinion. So right here, what do we have to do? Copy the image, go on journal, and then we're gonna do trade number 3. I'm gonna share that with y'all, and we could do like a lot of, I have my camera set up right here, I don't see shit, but we could do, you know, a lot of that. Or, you know, what is good with having a community is that you can split the work with other people. If you can find people that are down to, you know, take it serious, then, you know, connect with them and tell the guy, okay, I'm gonna do 2023, you do 2024, please, you know, lock in, take the right data, and your life will be twice, like, your life would be easier, you know, because you have a soldier with you, you have 2 brains. All right, this is what happened with me. You know, I had my brother on my side, so this is why, you know, I found a strategy pretty fast. But if I was alone, God knows what I would be trading right now. You know, I would probably, I don't know. But yeah, so that's the 3rd trade. So we are at 2 wins, 1 loss, and it's January 13th. But what do you have to say about this? The frequency of trades is pretty low right now, right? So if the frequency of trades is low, what is the thinking behind what you need to do if the frequency is low but the strategy is good? If you have, let's say, 6, 7, all right, no. If you have like 7 to 10 trades a month, all right, and it's a really good strategy, the right approach is just to size up more, all right? Make those trades count. But you don't necessarily need a high frequency of trades. You just need to size double. Let's say a normal trade that you would have taken was $200 of risk, then just size 400 because you know you're gonna have 10 trades a month. That's it. All right? Where the gap happened daily on US 100? No, you go on NQ, RTH on the bottom right, and then 1 minute chart. All right, 1 minute chart. This is the move, the Judah swing you want to fade in the beginning of the day. All right, so right here, another trade you could have caught really good. So now what are we doing? Go to next day open, same thing. All right, so now 930 opens up, fills a small portion of the gap. So right here, do we take that or not, guys? Of course we do. Of course we do. So right here, what happened? On the 2 minute chart, the one thing I would be doing though is making sure that we don't fill 50% of the gap. If, let's say, the first initial move of the 930 open, let's say in this strategy, should be to the upside if we gapped up. So you expect the 930 to go up first, then to see an inverse back towards the gap. That's your strategy. Well, let's say you have a gap, so this is the close, this is the new open, but then you have a candle filling, like let's say at 931, 932, and then it starts pushing up. Make sure you didn't fill 50% of that gap, because that's really, you know, the main draw, really, you know. So right here in this case, we pushed up, all right, didn't fill 50% of the gap yet. We're at a premium. We're seeing sellers in real time squeezing those buyers, all right. What do I see here in this case? Buyers are located between this candle's low, this candle's high. If we are truly bullish, we should respect this fair value gap to create new highs. But right now, we're disrespecting this bullish fair value gap, creating a bearish inversion. So what do I expect to see covering from those buyers right here. So if they want to cover their positions and they were in buys inside this fair value gap, they will have to click on sell to get out a break even. So if they click on sell, everyone will be clicking on sell at the same time. So this is what covering is all about. So right here, it would be a scenario where you would be forced to, you know, target more than the beginning of the opening range gap, because it's 0.6 RR. So for you to be at a 1-to-1, you would be targeting 50% of the gap at least. All right, bare minimum. So this would be the short. Two cons: stop loss at the high right here, take profit right there. All right, you could also, you know, have a bigger take profit if you want, but that's the trade. See a pullback, hold, and then boom, you take out your profits. So this would be your trade. Again, the same framework. Boom, 3 trades in a row. Yo, I cannot win a singular trade when I'm in, you know, I'm in the live markets. It's because you don't have, you know, you don't trade the same framework every single day. If you know exactly what you're looking for, it's so much easier to be comfortable with your strategy first, or just to stack up wins because you know what you're doing. If you only take trades because they look good, then the chances are everything will look good on the wrong side of the market. Okay, sometimes that's really what it is. So in this case, what am I going to do? Same thing. Top right, copy image, journal, trade number 4. Boom. So boom, copy paste. All right, then I take out the journal and I'll do the same exact thing for literally the whole session. All right, that's what I'm gonna do. It's already been 2 hours. Holy shit. So right here, go to next day open, gap up. No gaps here. Fill the gap a little bit. Pretty late. It's starting to be late right now, but I would say, like, if you are at around like 10, you could like take shorts all the way from like at 10:15, I wouldn't be looking for it anymore. All right, that's really about it. So right here, what is it? 10. So right now, like it's pretty much cooked. You don't want to take it anymore. All right. So now we're just gonna see what price is gonna do, but you don't want to take it. So right here, you see a whole lot of chop. Next day open. Boom, gap up from yesterday's close, right at premium. Immediately fills the gap. You don't want to have anything to do with that. Go to next day open. Is that necessarily the main strategy you want to trade? No, but if the data is good enough, you could start thinking about, you know, just taking those setups here and there, like 4 or 5 times a month, 7 times a month, to just stack up more wins. You know, that's definitely what you can start doing. So right here, you didn't quite fill 50% of the gap yet. This is pretty much a huge gap. So right here, we would have this 50% as our target. Let's say we opened higher, right? So we know we're at a premium. So right now, if I see, let's say, an inverse fair value gap, I could target this this 50%. So right now, let's say I go on to 2. Yeah, this is a really cool 2-minute IFVG here with tight risk. So boom, this is the 2-minute close again. Perfect. So I'll go short, stop loss right above this high, target that. You could target that low for 1-to-1 or literally 50%. Let's do this, but I'll go sell, stop loss right here, take profit right there. Can I just trim? I don't know how to scale, but I'll just do this for 1-to-1 because I don't want to fuck up the data. So here, let me go on the 2-minute because that was, my trade was based on the 2-minute chart. So I'm trying to play the gap fill right now. Does not look too good. Hold. start displacing down. All right, this is the take profit right here. So close 100% of the position. This is the take profit right here. I didn't take out the profits, but right here, exactly the same thing. We opened higher than yesterday's close. We're currently at a premium. We're looking for bearish signs to go back towards the gap. All right. Then what do I see here? I see price opening higher, creating a 2-minute bullish or value gap. If we're truly bullish, we should respect the zones, create new highs. If we're bearish, we're going to disrespect it, see the gap. This is exactly the trade you can could have caught. So right here, copy image, go on journal, and then I would write down trade number, what is it, 5. So then I would copy it. My camera is literally set up in front of it so I can see shit. But yeah, that would be it. 5th trade. All right. Let's take like a few more trades here and there, and we're gonna wrap it up. So boom, this is January 17th. We took 5 trades and 4 of them were winners. So now you go to next day open at New York. You open up, gap up from yesterday's close. We're looking for bearish signs. So right here, let's see if there's any 2-minute gaps, 3-minute, 5-minute. We still in this 5-minute gap. I don't want to engage in that trade yet. It looks pretty pretty aggressive if you want to enter here. So I'll wait. Boom. See this down move right here. Wouldn't engage in it yet. You filled the gap here, but I don't know exactly where I could have entered. Yeah, I could have entered here on the 1, but there was a 5-minute gap. Let's see if this 5-minute gap. So you see here, like, I kind of made a mistake. How can you journal that mistake though? Is still taking, you don't necessarily have to take the trade, but in this case, like, it's still a winner in some case. So let's say here there was this 5-minute gap, so you couldn't really enter off of the 1 minute. So you needed to see that 5-minute candle close to have, the confirmation that price would go towards the gap. So right here on this 5-minute close, right here, you could have seen the confirmation to go short towards the gap fill. So this, I saw there was a gap, but I wasn't putting too much of attention on the 5-minute, but this would have been the entry. 5-minute stop loss. You can put your stop loss right here and target the gap for a 1-to-1, literally like this. So it's the same exact confirmation. I was literally sleeping when this happened, but boom. So right here, stop loss, take profit. The thing is, when also you're backtesting, you could, it's different when you're gathering data than when you're practicing. If you're practicing, don't go back to take the trade again. But if you're gathering data, you need to know if that trade actually worked when you inverse the gap. Like you cannot mark out that, okay, there was no trades on January 20th, 2025. If there was one, just because you missed it and misread the market or did not look at the right time frame. All right, you need to have the right data. So let's say in this case, I made a mistake by not looking at the 5-minute chart closely with the close. And does that make so in my journal, I still have to mark out the fact that this would have been a win. Okay, I need to, because this is how you gather the right data. So right here, in this case, even if I made a human mistake, it's still a win. All right. So here, boom, again. So this would be on the 5-minute chart, 5-minute inverse fair value gaps. This is inverse fair value gap. This is where the buyers were located. If we were truly bullish, we should have respected this zone to create a new high. This is the Judah swing, 9:30 open. We found sellers right here. After the up move, this is a fake out to fill the gap. All right. So again, let's say here, what will you do? What the fuck, bro? I'm actually tweaking. I need to get the fuck out. What would you do? You would copy here, journal, and number 6. Yapping for literally 2 hours right now. So number 6, then I'm gonna show you the data, and yeah, it's gonna be done. So right here, let me see on Tradezilla, I go back and I go on dashboard, and then right here on this session, wait, what the fuck? I think it's taking all the other journal. Can I just see the journal of that session? Wait, I'm gonna go here on dashboard. No, let me see sessions. Yeah, I'll go sessions. Then I click here, and then I'll go on session results. Yeah, right here, boom. So right now on January 2025, we took 1, 2, 3, 4, 5, 6 trades. 5 of them were winners. 1 of them was a loss. All right. So we're averaging, not a lot of trades per week, but still pretty profitable for now. Entering 2 cons every time there was a big day here, more volume in the market. So this is the data for now on this gap fill strategy. I am gonna do more backtesting sessions in the future. Just for now, like I'm actually cooked, yapping for 2 hours, so my brain is literally fried. I cannot even speak English. The only language I can speak right now is French, because I have to think in English. So yeah, that's it for today. So if you wanna, what we're gonna do is that every time I will be, let's say, doing this backtesting session, I will, have the results here. Session results. Let's say here I can go in the session, and there will be this journal. So I will just share this journal. I will download it right here on the top right. I will download this journal as a PDF, and then I will send it in my Discord to the people who want the data on that. Let's say we're gonna do the whole 2025 pretty quick. If the whole session today was just backtesting, it would have been already done, most like at least to February. Not February, like April, I would say. I would have been finished with April. So that's pretty much it, guys. Appreciate y'all for showing up. It was a pretty nice session today. We went back over the trades you could have caught this week using inversion for value gaps. We talked about the importance of sticking to your own rules, not looking too much to the right and left, and comparing yourself with people that are trading high RR. People have different problems, with different systems. If you have low frequency, don't look to the right and be like, I want a bigger frequency, because you will face another problem. That's really pretty much what trading is all about. So find your system, backtest it. Find also a partner that you can backtest with, because your life will be much easier, in my opinion. And that's pretty much it. So went over the 5 best trades you could have caught this week, plus backtested 6 trades in January 2025 on the gap fill. Have a win rate of pretty much 80% right now. 5 wins, 1 loss out of 6 trades. Appreciate you guys. Also, if you're looking to trade a prop firm, I would suggest you go with Tradeify. Go to Moss, gives you a higher win rate. You guys have to know that. So I also have a YouTube video coming in about the open, high, low, and close. I want you guys to go in and show some love when it's gonna drop. It's really good. And yeah, that's pretty much it. Thank you guys so much. And I see you guys on Wednesday for our live trading session at 12:30 p.m. EST. See you guys. Peace out.